Success is the progressive realization of a worthy goal or ideal. Earl Nightingale. And my friends, each and every day we engage in this fascinating marketplace in order to hone our knowledge and give us the ability to make all sorts of great decisions in the future. Maybe early retirement, how to invest your money. When you know how the stock market really works and you become a master chartist and trader, the world is your oyster. Let me read you a quick quote from my latest book, Three-Wave Trading Advantage. It goes as follows: mastering the stock market is akin to riding the waves of a vast ocean. Success is intertwined with understanding the intricate dance between market trends, trader sentiment, economic indicators, and company-specific news. Moreover, the movement of exchange-traded funds echoes the shifts in underlying assets, equity prices, further illustrating the market's wave-like nature. And you see the wave-like nature on our charts each and every day, the weekly, the 2-day, and the 195-minute, which is the actual half-day chart. Not 4 hours, 195 minutes. That's why we use that. And we watch as the market plays out in these waves on the charts the way we have them set up. If you are using TradingView and you would like to set up the charts like we do, if you'll look in the show notes that we publish each and every day, we email them out. You can also find them at chartingwealth.com. You'll see a link on how to set your charts up like mine in this way so that everything is tracked. We see across all time frames our weekly trend line. Remember, we're trading off the weekly chart. That's what we do the most. Why? Because the weekly chart is the big wave, and we're riding big waves, not little waves. So let's go ahead and jump into things. Stocks and Bitcoin are down. Bonds and gold are up. Let's jump first into the S&P 500. We are still bullish on the S&P. It pulled back 0.25% today. You can see that happened at the end of the day. And again, not quite average volume there. We look at the 2-day chart, and this represents the Monday, Tuesday. And of course, we had a little bit above average volume. We're doing okay on the weekly volume so far. We're average in the morning, not so in the afternoon, but again, things ranked up okay. We are reaching higher high for the week. Last week, the high was 637.58. This week, 638.67. So we're moving in the right direction, even though it pulled back a little bit for the day. We are still long. Our directional probability is still long. Our backtest accuracy is okay. And we are continuing just this beautiful buildup as things have just been going wonderful in the Trump economy. After those first struggles that we saw, of course, in what? Well, when we first had all that talk about tariffs, and apparently all those fears have resided and the market has soared like mad. Now we're looking at the NASDAQ 100. We are still bullish on it. It was down a little bit, 0.15%. You can see things popped up in the morning, rolled back a little bit in the afternoons. What it looks like, we are looking at Heikin Ashi candlesticks, which again are different. For those of you who don't know what Heikin Ashi candlesticks are, I will put at the end of today's video our Heikin Ashi training, and I'd very much like you to have that. It comes right from the new book, and I would like for you to have it. And I'll attach it. It's not a very long training. It does explain the math so that you understand why we use Heikin Ashi candlesticks as opposed to the traditional Japanese high open, low close. Heikin Ashi help you see. They take so much of the confusion and noise out of the movement and help you see the average pace, which is what I'm told Heikin Ashi can be translated from the Japanese to mean in English. So as we look at things, we're continuing to stay long in QQQ and SPY, and it has treated us well. Now, at some point, we know it will go down. We know it will roll back. It may pull back very hard, but it hasn't done it yet, and we're still riding that wave to success. Now check out bonds. Bonds they were going down. I told you over and over again, I saw the telltale sign of an interim low, a green spinning top. We didn't quite have average volume last week, but we had the signs of a turnaround. And of course, as you look at things this week, average volume, a big up day for bonds, swinging up quite strong. That is again why so many times when you see the telltale signs of a rotation over, or you see the telltale signs of a bottom and things moving up, is when you have, for a down move, a red down candle with a wick on the bottom, average volume, and then a green spinning top turnaround. The opposite is an up candle with a wick on top, average above average volume, and then a spinning top turnover going down. So when you just see those candlestick patterns, but even more when they're backed up by the volume, and we didn't quite have the volume this last week to do that for us, and there were some reasons for that. It's the summertime trading zone's a big one, but things do look like they are turning around, and they're followed by our directional probability. It's better than a coin toss. And again, we have the charts to back us up on it. And of course, we had a nice, decent day in up moves on 20-year U.S. government bonds. We'll see how that continues to ride. About average volume on the 2-day. And again, up in the morning, further up in the afternoon. Beautiful. What about gold? Well, again, gold is, I just call it floundering. It has been back and forth, back and forth. It's up just a little over 1/4% today after many days of down movement, slamming below that weekly trend line on the half-day chart. 2-day chart also pushed below. Didn't have average volume, though, there. So far this week, we've just gone through Tuesday. We're okay on the volume. And what's gold going to do? I can't tell you. I can tell you that our current call is bearish, but it's just a coin flip, a little more than a coin flip bearish. So again, what happens when you can't read a chart? You don't know what it's going to do. You don't trade it. You do. Is that, am I pulling a Biden there? You know how you would always whisper to try to make a point? Well, I'll say it loud. You don't trade a stock, an ETF, where you can't read the chart. It's not even gambling. It's just stupid. So we're waiting for gold to sort its way out. Lastly, we will look at HODL. That is the Bitcoin ETF. We are still decently bullish on Bitcoin. It pulled back today 1/4%. And again, we had that high of highs back on the week beginning the 14th. 2 weeks ago, last week, didn't reach as high. This week, it's broken through that prior trend line. And we are just sort of waiting, watching, seeing what it's doing. You can see on the 2-day chart, 2 dojis, a red one, then a green one. The volume's been okay on that 2-day chart. The volume's been okay for a while, for many weeks on the weekly chart. But again, we'll continue to keep our eye. We are still bullish on Bitcoin. At least that's where the math is for us. And we'll continue to follow it. That's where we are as we end the day on Tuesday, go into Wednesday. Remember, if you want my book, all you got to do is become a Patreon supporter, and you will get, the first thing we'll do is email you a copy of the book, plus the 3-part series, Options Made Simple, The Charting Wealth Way. God bless, my friends. All the best from the whole team at Charting Wealth.